What's the cost, Jamie? Drum roll.
Drum roll. Well, the cost is around about 0.5% of world GDP. If you put that into dollars, that's about 470 billion US dollars in 2020. So that's roughly the output of the Thai economy. If you look at, obviously 0.5% of world GDP, it's not an enormous amount, but you know it's still significant. That's
an extreme case scenario, isn't it?
Well, what we've considered is if you lifted the tariffs on US bilateral trade. Yeah. So if the US lifts tariffs by 10 percentage points, if the rest of the world retaliates in kind, then that's the source of order of shock you'd be experiencing.
Explain how it propagates through the world economy.
So the main way it affects the economy is through higher inflation, because if you lift tariffs, of course, it lifts import costs, and that means there's less money to spend on other stuff. And so the bigger channels you see are sort of weaker household consumption globally, but particularly in the US. And also particularly in its larger trading partners or ones that are closer. So Canada, Mexico, very severely affected.
You say the shock begins to be felt in 2018, move through 2019 and 2020. What happens thereafter? Does the impact fade? Are the losses made good in later years?
So what you have is this initial shock because of those inflation rates picking up. That begins to fade, but then you're left with the long-term consequences of kind of reduced openness. And so that, basically, openness is good, right? We know that from the Brexit type analysis as well. We like to be able to trade with people, learn new ideas, adopt new technologies, and if there are barriers to that, then the whole world loses.
And in the major economies you looked at, Jamie, does anyone come out of this looking good?
No one.
Or healthier, to use the correct word?
No one really looks good coming out of a trade war. Ultimately, you may see some economies increase their trade or shrink their surpluses or deficits. But in terms of GDP, pretty much everybody's worse
I mean,
off.
on the plus side, the IMF has painted an even gloomier outlook, hasn't it?
Yeah, it has. So if instead if rather than just a bilateral sort of trade war, you have something where everybody sets tariffs on everybody else's goods and services, then the impact's bigger. It's closer to 2% of world GDP.